Coffee Shop has the following assets on January 1st, 2017. Mean Beans prepares annual financial statements and has a December 31st, 2017 year end. On January 1st, 2017, purchase equipment costing $15,000 with an estimated life of 5 years, and they will scrap the equipment after 5 years for $0. So actually, for each transaction, calculate the annual depreciation expense and record the adjusting entry. So let's go ahead and do that as we go. So, $15,000 for the new piece of equipment. So what is our purchase price? Right, because we're following purchase price minus residual value divided by number of years divided by months. So what is the residual value? That's right. We're going to scrap the equipment for $0. And the number of years? 5. And so what is that? So they would like the annual depreciation expense and record the adjusting entry. So let's go ahead and record the adjusting entry. So on December 31st,
would you not have to put in the first part of the question then? So you wouldn't have to put in like the purchase of the supplies or anything into the chart?
You've lost me.
I'm trying to word it right. Never mind.
Like, do I need to show the T? Do you need to show the T chart or anything?
Like on the previous question, because you did, like you balanced it with the transaction before the depreciation, so you don't have to do that on this one?
No, not on this one. No, it's not asking for that one. I see what you're saying. The original transaction.
Yeah.
For each transaction, calculate. No, it doesn't ask for that.
Okay.
So, the first thing we're going to do is we're going to debit depreciation expense. So it's just like any other expense that goes onto the income statement. We are going to credit what's called accumulated depreciation, comma, equipment. Now it's important to put the comma in what you're depreciating. Every type of equipment will have its own cumulative depreciation account. Depreciation expense will be the same regardless of the asset. Every different piece of asset will have its own accumulated depreciation account. So that's why we put accumulated depreciation equipment. Now it was purchased on January 1st. This is December 31st. So do we need to worry about the months? No, it was a full year. On July 1st, 2017, we purchased furniture costing $12,000 with an estimated life of 10 years. Mean Beans estimates that it can sell the furniture for $2,000 after 10 years. So what is the purchase price? What is the residual value? What is the number of useful years? How much do we depreciate annually? So we have our annual depreciation. Now we need to adjust as of December 31st. So, how many months are we adjusting for? July, August, September, October, November, December. 6. So we can divide, I'm just gonna do it the slow way, so we'll divide by 12, and then we'll multiply by 6. If you're picking up this faster, you can of course just multiply it by 0.5. If you're good with math, but if you need to slow it down and visualize it, 1,000 divided by 12 gets you your monthly depreciation, and then we can multiply it by 6 months. So what do we debit? Depreciation, expense, and what do we credit? On January 1st, 2015, Mean Beans had purchased a car costing $25,000 with an estimated life of 8 years. Mean Beans estimates that it can sell the car for $5,000 after 8 years. So what is the purchase price? What's the residual value? And what's the useful life? So what is our annual depreciation? $2,500, I think. So on December 31st, we have a depreciation. Pardon me? That's an 8, yeah. 8 years is the useful life. So for the car, determine the accumulated depreciation as of December 31st, 2017. So what would the accumulated depreciation be on December 31st, 2017? The total. So we bought it on January 1st, 2015. And at the end of 2017, what would our total accumulated depreciation be? So we have, if we were to take a look at our accumulated depreciation, car, in 2015, when we did our adjustments, we would have did 2,500. 16, we would have done 2,500. And in 17, we just did 2,500. So we have $7,500 of accumulated depreciation. For the car, determine the carrying amount as of December 31st, 2017. So what would the carrying amount be?
The total depreciation.
Carrying amount is like its current value. So if we purchased it for $25,000 and we depreciated $7,500, carrying amount would be $17,500.